selber die
But
deutsche
I'm really excited
Verdolmetschung
to
in
have
meinem Kopf
Christian
waren.
Mailman. They're a 3
Freue mich,
billion
dass
market
Christian
cap company. I've known Christian for a while. He was at
diesen
True Gold
Vortrag, den
before,
Christian,
and the company has been on a
diese
tremendous run.
Firma
They've acquired
hat eine
recently
gewaltige
another
Erfolgsbilanz. Sie
company.
haben
They're
ein
merged with,
neues
and I'm
Unternehmen
drawing a blank.
erworben,
Christian,
haben
I'm drawing a
eine
blank. Oh
Fusion
my goodness, that's
vorgenommen.
embarrassing. But it's a 3
O
billion market. It's on a
Also, das
growth
ist
path. Ross Beatty supported.
auf dem
It's a
Wachstumspfad,
fantastic mid-tier gold producer. So please
ein
listen to the presentation of
mittelstufiger
Christian. I really
Goldproduzent.
appreciate you joining us.
Ja, vielen Dank, Christian, dass Sie dabei sind.
Key asset, which is called Hard Rock in Ontario. It's one of the largest undeveloped open pit mines in Canada. And it really fits in our portfolio nicely. And Orion Mine Finance is buying the other 50% of that mine from Centerra. So what happens is we'll have a financial partner in Orion. We'll be the operating partner and we'll own 50%, maybe being able to own 60 or 70% eventually. And we'll unlock that asset and build it, and it'll be a 400,000 ounce producer in Canada. So that's the key thing that we're acquiring there, plus a smaller Mexican mine. Also, we'll be spinning out I-80 Gold, which is the US assets of Premier Gold, into a separate listed company. We'll own 30% of it, and Ewan Downey, who runs Premier Gold, will actually run it. And on the back of this, we will raise another $75 million. Ross Beatty will be the backstop and basically underwrite the whole thing. He'll hold at least 40 million of that. And after raising that, we'll have 600 million of liquidity, about 400 million of cash on our balance sheet. We'll also have $200 million in a revolving credit facility available to us. So we'll be very well cashed up to build and grow our portfolio. And on the next slide, when you look at this map, just to refresh here, we're currently in the Western US and California with 2 mines. We have a large mine in Mexico, and then we have 4 properties in Brazil. So between those, we've got 15 million ounces of reserves and 28 million ounces of resource. So a good scale company with 8 producing gold mines. And when you add Hard Rock into it, it really balances our portfolio. So we'll be about a quarter based in Canada, reserves, resources, ultimately potentially production. And then we'll be a quarter in the Western US and California with our 2 producing mines. We'll be a quarter in Mexico with 2 producing mines, and with the 4 mines in Brazil will be another quarter of our sort of value in our reserves and resources. So a nicely distributed portfolio, well balanced and diversified, fully funded to get to 1 million ounces of gold production over the next few years here. So we're really excited about what we're creating here right at the right time in the gold cycle. When you look at it from a valuation perspective, looking at these columns here, towards the right, we're one of the larger reserve-based companies here at 15 million ounces reserve. We'll have one of the highest growth rates in the actual sort of mid-tier to junior space, which is, growth has been kind of a dirty word in our sector for the last 8 years, and most people have been hunkering down and sort of trying to survive when gold price was in $1,100-$1,200 range, where we actively said we want to grow this company. So we'll be in that sort of 40 to 60% growth range. So big growth coming from us. And that'll take us to over 1 million ounces of gold production, about 1.3 million, as you can see in the second column. And ultimately, we're currently valued at about 0.6 to 0.7 times net asset value. So quite undervalued versus a lot of the producing peers that are either single asset or multi-asset producers. And one of our goals here is really to continue to grow our portfolio, build the mines that are in the portfolio, and actually get a re-rating up towards that 1 times multiple, which is sort of a normal multiple for a diversified mid-tier gold mining company. So lots of potential re-rate coming in the next 12 to 18 months. And quickly looking at that growth, we came from a standing start, as I said, at the end of 2017. We bought Mesquite, we built Arizona, we acquired Leagold, and now we've just finished building Castle Mountain in California, which adds production here in 2021, basically, or end of 2020. We've just bought the Mercedes mine with Premier Gold, and then we'll be finishing the construction of Santa Luz in Brazil, which will add another 100,000 ounces of production at the end of this year. So in 2022, you'll see full production from Santa Luz. And then we've got the expansion of Los Filos in Mexico from about 200,000 ounces a year up to about 350 to 400. And then we'll build Hard Rock and Castle Mountain Phase 2. So an ambitious growth profile, a lot of internally funded growth. It's all funded from our balance sheet and cash flows, but it's one of the peer leading growth profiles, as you can see. And quickly looking at the Hard Rock asset, because it's so topical at the moment, this picture I think sort of speaks very loudly for it. It's right along, or pretty much right along, the Trans-Canada Highway, so it's really accessible in sort of northeast Ontario or northwest Ontario, and it's a 5.5 million ounce reserve, so good scale project. It's permitted, it has First Nations agreements. It's actually set up to be built and it's shovel ready. So we hope to get into construction here in the second half of this year. So we're pretty excited about this project. It should close, the transaction should close in March, probably the first half of March. And then we can get together with the team there that's ready to go to build this project. And when you look at it compared to other projects in Canada, and this is something that was important to us, it's one of the largest, highest grade, undeveloped assets in Canada. Those are pretty scarce these days. A lot of single asset companies have built their mines. They're in production now. They've gotten a re-rating and evaluation reset. This was one asset that still was ready to go. It was permitted. It's almost 1.3 grams. So of scale, 5.5 million ounces in reserve. So fits in beautifully with actually the other mines in Canada. You look at Malartic and Detour Lake on the right. You've got Blackwater and Cote right around Hard Rock, but it's a higher grade. And we'll be ready to build that second half of this year. And the other part of the transaction, acquiring Premier Gold, as we said, we'll be spinning out the US assets, and it's 3 assets at the moment. South Arturo is a producing mine in Nevada. Ewan will run this out of Reno effectively. We think it'll get more value standing alone, listed. We plan to have this listed around the time that we close the merger in March. And, Barrick runs that South Arturo asset. It produces 50,000 ounces a year. McCoy Cove is a project. It's one of the highest grade deposits in North America. And also Getchell is another asset that Ewan did a good job of bringing into the portfolio. That deal will close. They're buying it off of Waterton here in the next number of weeks. So they'll have that asset in the portfolio as well. So this will be spun out. We'll be a 30% shareholder of it. Very similar to if you followed us, what we did with Solaris. There's a separate management team. We're a 30% shareholder basically in Solaris. It's gone from being sort of a 50 million market cap up to a $500-600 million market cap. And we really see a same sort of thing happening here. We'll be a cornerstone shareholder, support Ewan as he develops the value here. These assets are probably a little bit too small for Equinox on a standalone basis. So we thought, let's spin them out and let someone create some value from them, and we'll share in the upside with our shareholders. And for the near-term catalysts for this year, just to conclude things, as I said, it's going to be a busy year, actually a couple of years coming up. We've been really busy building mines, about 1 mine per year over the last 3 years. This year's mine will be Santa Luz in Brazil, as I mentioned. We also have 2 new studies coming out, probably in the end of the first quarter. One is the expansion of the Los Filos project. It's currently a 4.5 million ounce reserve sitting there in Mexico, producing 200,000 ounces a year. And the plan is to make it sort of a 12 to 15 year mine life. It'll produce 350 to 400,000 ounces a year. So almost a world-class asset there. And we will build a CIL plant, our carbon and leach plant, probably starting later this year. To put that one up to that 350 to 400,000 ounce production level. We'll also get a study out for phase 2 of Castle Mountain. It's currently a 40,000 ounce producer there in California. It'll be a 220,000 ounce producer once we expand it. And again, we need to amend the permits there, get the study out, and that study will obviously articulate the mine plan and the 4 million ounce reserve base that it currently has. And we'll also be exploring our whole portfolio. So we'll put some money into all the shorter life assets, across Brazil and California particularly, but also Mexico. And corporately, we've achieved a lot through M&A and then getting into the various indexes and getting listed in the US recently. And our plan is to continue along that route. We'll keep looking for value. We'll build the mines that are in our portfolio. We'll continue to explore them as well, but we'll also continue to look and see if there's any assets of value outside of our portfolio. But we don't need to buy any assets to continue to grow. We've actually got some fantastic growth, as I articulated earlier, in the portfolio.